With negative gearing being a popular strategy among many property investors, it may come as a surprise to you that, according to the ATO, around 40% of the residential investment properties across Australia are either cash flow positive or neutral. So these properties definitely exist. You just need to know how to find them. And that's what we're going to show you. Hey everyone, Kim Quach from Geotas here for another video designed to help you become a better property investor. It's no surprise that investors tend to opt for a negative cash flow strategy because you can offset the loss from your income, essentially reducing your taxable income. Some property experts even go as far as saying that if you choose a property based on positive cash flow, that you risk missing out on capital growth. But that's not necessarily the case. Most locations, both in capital cities and regional locations, have the potential for capital growth and positive cash flow. You just need to know how to find these properties. And with interest rates at historical lows and national rental values rising at their fastest pace in a decade, property investors have an unprecedented opportunity to buy positive cash flow properties. It may seem that finding positive cash flow properties in Australia can be like looking for a needle in a haystack, but we have a few tips and tricks that can help you locate a property that will help you generate enough income to pay your expenses and have extra money to work with each month. But before we start, we want to be clear that this video is for informational purposes. In no way should you interpret this as financial advice. We always recommend working with a qualified financial advisor or tax agent to give you the best advice in your situation. Before starting on the practical strategies for finding positive cash flow, the first and very important step is getting educated. There's a reason why only 18% of Australian property investors make it to their second property. And that's because without the proper education, you have no idea what pitfalls to look out for. So, find yourself a property investing mentor, build a team of property professionals, and join communities of other avid property investors before diving into your first purchase. You'll avoid plenty of the mistakes that others make by doing this. Plus, you'll have a much better chance of finding a positive cash flow property. Okay, so now let's have a look at some of the most practical strategies. Our second tip on finding cash flow positive properties is looking at high yielding suburbs. High rental yields boost cash flow. A rental return of around 5% or more is generally a positive signal. In some parts of the country, rental value growth over the last year have been significant. According to CoreLogic's latest quarterly rental review for September 2021, rental rates are 8.9% higher year on year, the highest annual growth in dwelling rents since July 2008. While the gross rental yields are on the rise in capital cities, you are more likely to find higher rental yields in regional areas because properties are often less expensive compared to capital cities. Property prices increase the most when demand is strong and supply is limited. That's why property prices closer to population centres, where land is scarce, tend to rise more than prices in small centres or rural towns, where land is abundant. For example, in Brisbane, the average gross yield is currently around 4% for houses and 5% for apartments. But in regional Queensland, the average gross yield for houses is closer to 5% and apartments are above 5%. In Perth, rental yields for houses are around 4%, but in regional Western Australia, you're looking at 6%. And when it comes to apartments, there is a 2% difference between Perth and regional areas. Cash flow investing is generally harder in Sydney and Melbourne because homes are much more expensive. Another factor that impacts your ability to produce cash flow properties is your home loan. Remember that your mortgage and the related interest is the largest recurring expense you'll face. Choosing the wrong one could lead to a great property being unable to generate positive cash flow. So, our third tip is to dedicate as much time to researching loans as you do researching the property. For example, right now, home loan interest rates are at an all-time low. According to CoreLogic, the average 3-year fixed rate for new investor loans is 2.35%. So if you're considering buying a property in the city, a positive cash flow might be doable now. Take a typical $1 million apartment, for example. On an 80% LVR loan at 2.35%, your interest cost per year is $18,000. Add, say, $10,000 in expenses, and you'll get $28,800 in total costs. Sydney's 3.3% apartment yield will cover this entirely at $33,000, and you're cash flow positive by $80 per week. It's all about timing and finding the right home loan. There are dozens of lenders who offer hundreds of loan products between them. That means there's no reason to take the first loan that you can find. Consider speaking to a mortgage broker to help you find the best loan product for your circumstances and investment strategy. Fourth on our list of tips in finding cash flow positive properties is looking into the vacancy rates in the area. Low vacancy rates leads to greater rental demand, which means higher prices and less time without a tenant. Vacancy rates of less than 3% is a good indicator of solid rental demand, ensuring your property will never be vacant for more than 1 or 2 weeks every year. Another factor to consider is infrastructure. Local amenities have a powerful influence on vacancy rates and rental prices. That's why we look for locations near schools, universities, shops, transport, and other desirable infrastructures. Or even better, locations where infrastructure is being built but has not yet been priced into local property market values. So, rental yields, home loan rates, vacancy rates, and infrastructure are all factors you should look at when shopping around for properties, especially if you're looking to find cash flow positive properties. But there are certain categories of property and locations that are known to produce a positive cash flow. So, the sixth tip on our list is to consider targeting multiple income properties. In other words, properties with granny flats or dual key houses. A dual key property is essentially one main property that looks like a standard home from the outside, but is designed and divided into 2 separate units. So think of it as a mix between the concept of a duplex and a granny flat. It's 2 units in one property, but instead of 2 mirrored units like a duplex, it's usually a house on one side with a unit on the other side or inside. Tenants like the fact that they are brand new, look like a single dwelling, and the rent is lower than a standard home. Plus, there are no strata fees, they are usually in high demand areas, and if one half becomes vacant for a while, you still have a benefit of the rent from the other dwelling. Granny flats are also good for an instant cash flow because you can also generate 2 incomes. When it comes to locations, mining towns are also great if you want to find a positive cash flow property straight away. Look, the prices are very high for the areas that they're in. Towns like Port Hedland in Western Australia have 3-bedroom houses for over $1 million in the middle of the desert. But the rental return on that property can be over $2,000 per week. This is because these small towns have a huge demand for housing, but not enough supply. However, mining towns have their own risks, so make sure to consider that as well. Another location could be country towns. Travel out from one of the larger centres and investigate all the different and smaller country towns. Country towns can be a great place to find positive cash flow properties because the prices are lower, and if the rental demand is there, you can generate good rental income compared to the property's purchase price. So, there you have it. All these factors will help you source out properties that are more likely to generate a positive cash flow. But finding them requires a lot of research and planning. So make sure you find the right team of people who can help you locate these properties and build your property portfolio. And make sure to check out our YouTube channel to subscribe for more property investment tips. And make sure you click on the bell icon so that you get notified of the next video. I'm Kim Quach from GeoTax. See you next time.